Thanks, Eduardo, for the introduction, and good afternoon, everyone. Our colleagues said before lunch that they were between ourselves and the lunch break. Now my task is after lunch, after you've all got full tummies, to keep you all awake. So, because I know it's always a challenge post-lunch. So as Eduardo mentioned, I've been working internationally for quite some time now. And probably one of my favourite responsibilities is working with PEMPAL, which is the sister organisation to PEMNA. And I'm pleased that we've got colleagues from Kazakhstan here with us today as well, because we work together in PEMPAL as well. So I'm very pleased to have the opportunity. I want to thank the PEMNA Secretariat and the steering committee, and also the World Bank, for inviting me here to be involved with you over the next 2 days as well. So I really do appreciate that, and I hope to see more cooperation between the two networks, because I think they are a very valuable resource for all of us. So and I often say at PEMPAL that I don't know why I'm getting paid to come to these events, because I learn so much which I can then use when I'm talking to other countries as well about the positive experiences and the reforms. And I think the other point I would make is that most of the really important reforms that are occurring internationally now are not occurring in developed economies. They're occurring in developing economies like your countries. And developing governments. So we're seeing some really amazing things happening in countries that we wouldn't traditionally have thought would be leading the field. But so I think it's to look to each other and the other networks and countries from the other networks as well for the reforms that are being more innovative and more successful in overcoming some of the challenges like COVID and other things that we're seeing. So I'm going to talk today about two areas. The first is control, and I'll cover what control is, how it's changed over the years, particularly with central systems and automation. But I also want to talk about the essential elements of control. And I think this is very important when we think about accrual accounting as well, because the reality is that we cannot manage on a pure cash basis. We don't manage, even though countries might be saying that they're reporting under the cash basis IPSAs or on a cash basis, the reality is that every government must manage other things other than cash, for example, our debt. So we can't be successful as countries and can't be successful as governments if we don't. And then I'm going to talk about something that's becoming more critical in terms of the way we focus on it, but it's always been important, and that's how do we focus on risk and how do we integrate risk management into our practices. Now, I've actually put together some slides today. There are too many for me to present on, so I won't be talking to every slide, but they will be there for you as a reference, I hope. But certainly if you've got any questions that go beyond what I present today, I'd be more than happy to answer them during the Q&A or at any other time during this workshop as well, or via email. So please do take that opportunity. So the first thing I wanted to talk about is how things have changed. And I'm sure you all understand this, working in accounting and working in the Treasury, that we used to run our organisations in a particular way, where we were focused very much on making sure we accounted for everything at a detailed level. We had paper-based controls. We often had to sign documents physically. Maybe we still do. There was a lot of central controls. Maybe we had partial automation. We often had many officials involved in the paper chain and the process for any one payment, for example. And I think that one of the things we could describe the way we managed in that traditional environment was we were quite risk averse. We wanted to make sure everything was accounted for perfectly, and that we could actually tick the boxes, if you like. And we often reacted to problems rather than actually prevented them from happening. Now, that's not how we have to manage today. And it's not just the treasuries, but it's particularly the treasuries. You need to be focusing on your performance. How well are you doing the functions and activities that you're responsible for? You need to be looking at making sure that things are moved to become electronic and we move away from manual processes. So if there is anything that you're still doing manually, it should be a target for reform. And I think our colleagues from Korea, we know how well they've done with dBrain and with their automation processes. They are an example of how you can automate pretty much everything, which is great. we're also seeing a move to decentralise some of the initial controls, because the reality is that when we talk about payments particularly, they're actually being initiated in the line ministries, not centrally. And that's important that we shift the primary decision processes and some of those controls to where that's actually occurring. Doesn't mean we still don't have a role in the Treasury, but it's recognising that we're not making those decisions on a day-to-day basis. We obviously want to move to full automation, as I've mentioned, and the controls we want to see in our FMIS or our accounting systems, not external to those systems as well. This is really important because this actually allows us to monitor what's happening as a Treasury as well and to see how well agencies are performing. We also want to move towards a focus on risk management and integrate risk management into the way we manage and operate. And rather than reacting to problems, by using your FMIS, by analysing your data, by monitoring your systems, you can prevent many things going wrong. And so you can become an active manager. We talk about active cash management always as being the way we want to be managing our cash position. But in fact, the Treasury should be actively managing as well. We should be looking at our financial information, not at the end of the accounting period, all during the year, because we should know what our position is. If we've got problems with particular ministries or particular areas of governance, we should be addressing those issues early. And the only way we can do that is if we actively manage and we monitor using tools like our FMIS. So it's really about a transformation. And in a modern environment, these are the things that we need. And I've been very careful to put the Treasury at the centre of this process because really we are key. We saw this during COVID, that Treasury operations were critically important to government's ability to mobilise resources, make payments quickly and seamlessly. And we saw during COVID that there was really two sorts of things that happened in most countries. One was we saw countries accelerate reforms and really take advantage of the problems or the challenges and to streamline and improve. And then we saw other countries struggle and really not cope well with the crisis. So what we need to do now, I suppose, with the benefit of this is look back and say, well, the countries that really managed to improve and thrive during this crisis, what did they do better than us and why? How did they manage those risks better? And how were they able to accelerate reforms despite the fact that COVID was such a challenge? So these are all the things that we need to have in place to be a well-managed Treasury and to have good modern budget execution controls. And these have all been mentioned by others today in their presentations. We heard the Philippines, for example, had a question about the Unified Chart of Accounts. That's so important in a modern environment. It's probably one of the most important things, but it's one of the least understood because it's not just about accounting, is it? We heard Ian talk about the Unified Chart of Account or how we need to be integrating our information and management so that we can produce GFS-based reports, government financial statistics reports, macroeconomic reports, budget reports, and financial reports, all from the same data source. The key to that is the Unified Chart of Accounts. So that's really important. Having a single general ledger, integrating our finances across government so that we maximise the utility of our system. A Treasury single account, banking interfaces so that we can ensure our revenues are collected in an automated way using the power of the banking system and in some cases beyond the banking system in modern digital government, but also on the payment side so that payments are going out seamlessly and we don't continue with manual payments or checks or cash. And these other elements also are key as well. So all of these come together to create the effective control environment that will improve our systems. So I've talked a little bit about controls. So what is internal control? So it's the systems, the processes, the procedures that are in place to safeguard our assets, not just our cash, but all of our assets. It's all about minimising errors and omissions and ensuring that the operations are conducted consistently with the legal framework we have in place. And we're trying to achieve government's objectives as well. So really it's about managing the budget execution process, isn't it, in many ways, and the integrity of that budget execution process. So as I've already mentioned, in the past, a lot of this was done manually. and was, as I said, was quite reactive. So we would actually have most of the verified controls occurring at the end of the payment process, often centrally in the Treasury. But nowadays, because of automation and because of the way we've integrated the way our transactions are being captured and processed, we can now start shifting those controls to the front end of the process, and where they're going to be far more effective and help government achieve its objectives more fully as well. So having controls in our systems, whether it's an FMIS or an accounting system, this is a really important step forward for every country, because even though the system's centralised, it means that we can decentralise the decision-making process, but still be able to monitor that in the Treasury or centrally. So what are some of the factors that influence the way your control framework has evolved? What I've come to realise is that, you know, I started off in the public service in Australia and spent my first 16 years working there. And until I left Australia, I assumed that was how everyone operated. And then I stepped outside of Australia and worked in those other countries that Eduardo mentioned. And I've realised that Australia is not like every other country. It's quite different and somewhat unique, actually. There's a lot more happening out there that's quite different to what I was used to, and there's very good reasons why those systems won't be the same as they are in Australia. In fact, I generally would not use my country as a best practice example for many other countries, purely because I don't think it will always work in every other country. I think a lot of the factors and a lot of the things that apply in your countries or in other countries may be quite different to what works or in some cases doesn't work in Australia, as I've come to realise as well. So if you're coming from a Francophile background or an Anglophile background, or there are other files as well, but basically if you have those differences historically, they will influence how your systems evolve. The level of automation that's in place and is capable of being put in place is really important. But most countries are now addressing this issue more successfully. And we heard that, for example, I'm just using the Philippines as an example again, even though they don't have a single system, that doesn't mean you can't have an automated solution to your processes and you can't share data across different systems. So that's a really important thing. So, okay, an FMIS might be the goal for most countries, but it doesn't have to be the only way to get there anymore. It used to be. We used to only talk about that central system. Now we can have a series of subsystems that can together achieve the same result. The degree of transparency that occurs in government, if you're not publicly providing information and not open to public scrutiny, there may be some challenges in terms of accountability. And that really does enhance accountability, having transparent information. Patrick was talking to me about Georgia before. And one of the things that I remember Georgia did was they released all of their payment information into the public domain. So anyone could scrutinise anything that was being processed by government, and that actually resulted in a whole raft of potential bad decisions being avoided. The enforcement culture. I mean, this is what I've seen in some countries, that even though you might have strong rules or laws, if those rules or laws are not imposed on officials, they are next to useless. So having a good legal framework in place doesn't necessarily mean that those laws will be followed. So that's one particular challenge that I've seen in a number of countries. And another one is, what's our appetite for risk? And I'm sure you all have experienced this, that we get told that we're supposed to manage effectively and we're supposed to take risks in a particular way. But if we make a mistake, all of a sudden the concept of risk goes out the door, and we're held accountable despite that. So, you know, you make one mistake in the public service and you do 20 things right. What's your score? It's not 19, it's -1, isn't it? Okay. So even though we might talk about risk management, we often have decision makers or our leaders who expect us to be risk adverse. And that's something we have to I suppose, teach people about and see a cultural change in our government as well. Are there other factors? I'm sure there are. I'm sure you can think of other things which affect your control framework in your country. So one of the things I'm emphasising here is that the traditional end of payment process controls that we had in the Treasury in many of our countries is really something that was required because we had manual processes and manual systems. We could only really do things as gatekeepers in the Treasury. We would get the payment at the end of the process. The decision about what was to be paid or bought and the contractual processes all occurred before it gets to the Treasury. But at the end of that point, the Treasury said no or says yes. Okay, so that's the traditional approach for central controls. So it's right at the end of the process, and unfortunately, the reality is that's too late. But we didn't have a better option in a manual environment. That was really the only option we had. And I suppose the control that was partially there was the knowledge that the Treasury would say no if they found something was wrong. Okay, so there was some benefits in that, but it really wasn't an ideal way for making decisions or imposing controls. And you can see what I have up here is a diagram which shows all of the major stages in a normal payment process. But we didn't get that document in the Treasury or make those controls until almost the end. So that's a weak or poorly designed system, if you like, when you think about it objectively. So those central controls, this slide really just says the things I've already made the point on. It basically says that even though we had no choice because we had manual systems and we had manual processes and we would get the payment documents at the end of that chain before we generated the payment centrally, the reality is that they really didn't add a lot of value to the payment process in itself other than act as a bit of a deterrent. And so what we want to do in modern government, and again, I think Korea told us about the fact that when they implemented accrual and they implemented D-Brain, that one of the things they also implemented was program budgeting, which is results-based budgeting. Okay, so what are they trying to do with that? They're trying to get a better understanding of what's being achieved with the resources as we use them. Surely that's also the objective when we make payments. We want to make sure that we purchase and buy things that are going to add value to government, don't we? Okay, so really, if we're making good decisions about payments and we've got good controls, they should be contributing to that process as well, shouldn't they? That should be the objective. So in the old systems, we would give the same amount of attention in the Treasury to a $1 payment or a 1 unit payment as we would to a 10 million unit payment as well. And that doesn't make a lot of sense, does it? If we've got low value transactions, they implicitly are lower risk, aren't they? Because the impact on government is less. But high value transactions, we should be very cautious and careful with those because they could have much bigger impacts and a much bigger impact on the results government achieves. So it's not to say we don't pay attention to the $1 transactions, but we do want to make sure we allocate the risks and we allocate the controls in accordance with the impact that has on government. So what are we saying about that? And this sort of goes back to the whole concept of whether you're doing cash-based accounting or whether you're doing modified cash, modified accrual or accrual. And the reality is that if you look at this diagram here, it shows you that in many countries, the focus is on the yellow column only, on the paid, on the cash. But can we even manage a budget that way? If we're only focusing on the cash, we don't know what we've committed, do we? So we might have committed far more than was appropriated. If we don't control commitments as well, we don't ultimately control cash. And that's one of the really interesting things about cash accounting is that ultimately to do cash accounting effectively, you have to modify that. You have to do more than just cash. You need to be managing your commitments and controlling them. And you need to be managing your payables and controlling them and linking all of those things together. Okay, so ultimately in a modern system, the goal is not just to manage cash. Even if we're reporting financially cash, we need to be also managing and controlling the commitments and the payables as well. I think that's clear, isn't it, to everyone? But how many of us are doing all of that? And that's one of the questions, I suppose. So we've got to, if we're going to be managing cash, manage more than cash. And I think that's one of the really big messages that accrual has taught us over time is that the only real way to manage our position, if it's even on a cash appropriation basis, is to make sure we control all of the payment stages, not just the stage that payments occur at. And of course, one of the things we might do is we may not have the resources or the ability to control all commitments, But when we do an analysis of our payment profile, and I will almost say without doubt that every country in this room will see this, that less than 10% of your payments will represent more than 90% of the amount of money that's spent. So a small number of transactions represent the bulk of what you spend. So if we can at least control those, then we control the most of the resources being spent in the budget as well. So the big ticket expenditures are the ones that are most critical to control. Ultimately, you want to control them all, I think, all commitments. But even if you only control the high value ones, you'll get 90% of spending anyway. So this is sensible risk management, isn't it? If you can't do it all, then at least focus on the big numbers. And so what I've tried to focus on here is for some of you, you're talking about procurement systems and you're talking about, portals and all these sorts of things. Not everyone's always talking about how you integrate those, though, with the FMIS. And so sometimes these things are being developed in isolation from each other. So the procurement system is there for the procurement stage, but it doesn't link into the FMIS and the payments. That's a real lost opportunity, isn't it? Because the procurement system and portal is the beginning of the payment process, isn't it? And so we want to make sure that all of the controls that would occur then, and there are many, that they pass forward into the FMIS so those controls don't have to be repeated in the FMIS. Just makes sense, doesn't it, when I say it that way? But for many of us, that's not what's happened. And that's the solution to what the Philippines has been talking about, is that if we can make sure that all those different systems at least add up to the whole, and we share data across those systems and we have a common unified chart of accounts, then we can actually pass those controls that are undertaken earlier in the process forward into the FMIS and other systems. So we don't want to see these systems happening in or being developed in isolation. We want to see them being thought about as an integrated control framework, don't we? So something I just did for PEMPAL. I wanted to talk about, a conceptual idea of the stages of control, and the goal would be that we would move through those stages so that eventually we get to level 5 type controls. So a level 1 control is just making sure that we don't spend more than the budget. Level 2 is making sure that the spending was in accordance with a cash or a procurement plan that was being prepared and submitted centrally, or a spending plan. So we can see we're just going up the what you achieve at each level in terms of controls. 3 is ensuring that the payment process requirements are being met, that there's a correctly rendered invoice, there's a competitive tendering process, all of the things that are required under the law. So for most of us, we would be, I hope, getting to level 3 quite clearly. But then level 4 is about, well, was that an efficient value for money decision that was being made by government? And then level 5 would be saying, well, now when we made that spending decision, was it something that would contribute to the outcomes of government? So really trying to get back to that program budgeting, results-based focus, and saying, have we contributed to what we were trying to achieve? Was the spending a good use of public money, and will it achieve the best possible results for us? So the question is, how well do our budgetary controls contribute to those different levels, and what level we are at? Really, it's a rhetorical, it's something for you to think about. But ideally, we want to make sure that our control framework contributes to the objectives of government, don't we, ultimately? So what does that mean? That means we need to control these elements earlier in the process. So the effective controls, the ones that really are going to contribute to government's outcomes and value for money, are going to be controls that occur when we make the procurement decisions, aren't they? So we need to make sure that that's where the effective payment controls are. And then things like the traditional gatekeeper role actually probably has become redundant, because we've already made sure earlier in the process that those controls were in place. So the sorts of things that we were doing at that final check in the Treasury, if that's still happening, really are just making sure that level 1, level 2 or level 3 controls are being fulfilled. It's not level 4 and 5. So this is really something for us to think about, that effective controls, and it's, if you think about it, it applies to any process. And we used to call it total quality management, I think was one of the things many years ago. That shows you how old I am. But total quality management was all about trying to make sure that we made decisions and controls early in the process so that things didn't go wrong later in the process. It's about protecting the integrity of that process itself and ensuring the integrity of it. So basically something for you to think about, as I said, what if you agree with what I'm saying here, where should these controls be undertaken? Should they be in the Treasury? Should they be in the line ministry? And therefore, what is the role of the Treasury at that final payment release process? In many countries, the Treasury does not execute any controls over the final payment release anymore. And that's because there was a realisation with automation that role had gone. Okay, so something to think about if that's still the case in your country. And I realise there will be some examples in this room where those controls don't exist anymore, which is fine. So the question is, if you still have those end of process controls, what's the appropriate way for them to be managed and affected? And it's not to say that you need to get rid of them completely, because in some cases they do represent an additional control that can have some benefits or effect, but you need to think about whether that's the future role of a modern Treasury in a largely automated environment. And so this is really what I'm saying here, is that shifting the controls forward in the payment process is key, and making sure that we link those earlier controls and those earlier decisions forward in our systems and our automated processes, so that those controls pass forward and don't have to be replicated later on. There's no point in the Treasury ticking a box if that box has already been ticked by someone else earlier in the process. We want to link those things together. And that's this very simple example I give you is the procurement system. A procurement portal that doesn't link into an FMIS is a lost opportunity. And we really need to figure out how to do that. So what sort of things are we seeing? And I'm going to skip through, I think, to some examples here. Actually, I'll go back. Basically, it's how, I think one of the goals now is how do we make sure that the automation process occurs where the transactions occur. That's the goal, the ultimate goal. So if we're making a decision to buy something at a requisition stage, we want to somehow link that into our system so that that process is automated as well. And then we pass that forward to the procurement stage, we pass that forward to the commitment stage, and then finally when the goods and services are received and the invoice, we pass it through to accounts payable and the payment. Okay, so it's really linking all those things together so that we capture information when the transaction is being generated, not some stage down the process. So if that transaction is being generated by a spending unit, we want to be somehow capturing that information from the spending unit. Now, does that mean they have to have the FMIS in their spending unit? No. Many systems are using, many countries are using very simple data portals where that information is being captured and then being brought forward into the systems. So there's many ways for capturing information that we couldn't consider in the past, and we should be looking at how we get the automation processes to where those transactions are being generated. So we don't want to be consolidating across different layers of government. We want to be capturing the transactions and then passing that forward centrally. And then we've got this rich database of information to analyse for everything. It's very powerful. And that's what we're doing with big data in many countries now. So a simple example, again, is if you've got a vendor who's not meeting their tax obligations, very simple to actually have that being passed forward from the tax agencies to the FMIS, and we block that vendor. We don't pay them until they fulfil their tax obligations. Or we take the payments they would have received from government and deduct them against the tax liabilities that they that are owed. So these are simple things, but they are very powerful controls, and they make a lot of sense, don't they, in terms of how we can better integrate our control framework. So the conclusions is, in general, controls are being decentralised to MDAs and spending units because the FMIS or the systems are able to pass that opportunity out to where those transactions are being generated. And that doesn't mean, as I said, that there's no role for Treasury in this process, but that should be one based on risk. And if any of you have looked at what's happened in France or Belgium, when they modernised their frameworks and their systems, they have eliminated a lot of traditional central controls. And two examples from PEMPAL are Moldova and Georgia. Both of them, for reasons of resource constraints, were moved to a risk management approach. And so they have certain payments which are processed automatically through the Treasury, and then higher risk payments are given some additional level of checking by the Treasury. So they've actually identified which payments are higher risk, and those ones are given a secondary check by the Treasury because of that risk, but the majority of payments just automatically pass through because there's an assessment that the risk of something being wrong is very low. And the reality is, in some cases, you'll be able to recover those payments in the future, so that means they're less risky, or the impact of something going wrong with those payments is very low. So it's really important from a risk management perspective that we understand and analyse our payment profiles for that reason. And the pure thing that's changing is that the automation that you're implementing in your governments and your countries is allowing you to shift the controls that were traditionally manual to automate them. So now we need to analyse those ongoing controls that may duplicate or replicate earlier controls, and we should be eliminating them. We should be getting rid of anything that doesn't add value. If it's already been done, let's not do it again. And again, the key for this is risk management. So that's my segue into the second part of the presentation. So what is risk management? It's the effect of uncertainty on your agency's objectives. So what's that mean? So when we want to manage risk, we want to manage that uncertainty, and we want to give ourselves greater assurance that we will achieve our objectives. So we want to basically analyse where we have potential risks. We want to make some decisions about those risks, whether they're significant or not significant, and then we want to take action to mitigate those risks where appropriate. So it's actually about managing our organisations in a more strategic way and making sure we understand what some of those risks are and how we will address or deal with those risks. So risk management doesn't mean risk-averse management. It's very much about making decisions based on the resource impacts of a negative outcome, okay? So we want to make sure that the majority of our resources are being placed in areas that have greater risk, and our controls should be mitigating those risks as well. And sometimes risks will be positive too. They won't always create a negative outcome, although in Treasury, I suspect, modern treasuries, there are lots of major risks that we can't afford to take. For example, I have personally been impacted by data breaches in my country in the last 12 months. One former government agency and one current government agency both had data breaches, and my personal information is now gone onto the dark web. And I'm only one of 10 million people, by the way, that's been affected. So I didn't take it completely personally. But that's one of the issues we have in modern government, isn't it? That we've got to protect individuals, and we've got to protect our data from these external, potential external negative things. So this is just one of the challenges facing a modern treasury. So I've already mentioned that the world has become more complex. The challenges that you are having to deal with are more complex. We can't just ignore these big external risks anymore, can we? It's impossible to ignore them because the consequences if something goes wrong is pretty dire. For example, if our treasury system during COVID just didn't operate and we couldn't pay people, the economies would have collapsed, wouldn't they? Because so much of what was being spent in the economy during COVID was government. So government became so much more important for many countries, and the Treasury became so much more important for many countries. So we need to make sure that we have the ability to make or support those systems, and those systems can operate even if there are attacks that are coming externally. So this is something we have to develop in terms of our business continuity plan for our treasury systems, but also the other systems that depend on us or we interact with, like the banking system. So I've just given you some. I've got some things here. I'm going to have to skip ahead, I think, because I think I'm running out of time. But you can also all refer to these, and I'm sure some of you have seen many of these things presented before in different ways. But if you're looking for the model of internal control, there's a group called the COSO, which actually hails from the US, which is a group of internal audit organisations that came together, and they identified the framework for effective controls and risk management was a combination of the internal control framework, which I've just been talking about, and having an enterprise risk management framework as well. So how do we integrate risk management into our organisational's way of operating? So our strategic planning processes, all of our planning processes must also involve a risk management element as well, and that should be just the way we operate. And that's the way we end up with a framework, a control framework that is more rigorous and which is based on a sensible assessment of the risks as well. So this is just the elements that the COSO framework talks about. I'll just leave you to look at that yourselves. This doesn't mean when we talk about internal audit, and I think this is one of the big mistakes about the concept of internal audit. Internal audit is there to support management in a systematic way or systemic way to address risks and to identify where those risks are. It's not there to do the management's job. Internal audit is not part of the control, the actual control framework. The managers have to make sure those controls are in place themselves. So you cannot obviate your responsibility or pass it to internal audit. That would be a poor control framework decision. And if you involve internal audit in the control framework, then they're not in a position to be able to objectively assess that framework either. And so this is a similar sort of view of the risk management framework, and you can see that it has a strong relationship to any planning framework as well. So it has to feed back on itself, doesn't it? You have to be continually monitoring and evaluating how you're performing so that you can continually improve and pass through that framework too. So that's from the ISO standard that's internationally available. So it's just a different way of presenting the same thing that COSO has presented in the previous slide. So to understand risks, we also have to understand why we're there, what we're doing, why we're doing it, who are our stakeholders. We have to understand all of those things that you need to do through strategic planning. So risk management is just a revisiting of those things, but with the added focus on how we are on identifying the risks and then taking steps to mitigate those risks. So a lot of this will already be there, in other words. You'll already have been doing some of this. It's just how we then add in, if you haven't already, a focus on risk management as well. And so this is what risk management, I don't know how those things have appeared on the slide, but there's a couple of some things in the background, so that wasn't there before. But anyway, so you can see what we're trying to do here is with all of our risks. So you end up with identification of your risks, and you end up with a risk register, which is basically a list of all the risks you've identified. And then you put them in this this continuum or two-way continuum, which is what's the likely cost of the risk if it occurred, and what's the probability of that risk occurring. And so where things are expensive and highly probable, these are the big ticket items we need to focus on, aren't they? So I went back to my manual system there instead of using automation. So that's because I'm old. So these are the big ticket items. These are the ones where we cannot allow the risks to occur. We have to take steps to prevent the risks. We have to make sure our systems and processes prevent these ones. But these ones, we might be able to live with. You know, that it may not be that this will have a significant impact on our bottom line. So maybe we accept some of these risks. We just manage, maybe we just change some simple controls, or we set out an education information to line ministries to make sure that they are doing the right thing. But we're less concerned about these things because they're not particularly negative in terms of the outcomes. Okay, so this is what we're doing with risk management. We're making an assessment of first, what are the risks? Then what will be the impact of those risks be if they occur? And then we focus ourselves on the higher risk areas, don't we? And this is particularly important. You've got less resources than you've ever had because you've got more things to do. So you need to manage those resources better, don't you? And this is one of the secrets to how you do that. So this is how you focus on doing the risks. So you document the risks and you maintain a register of those risks. So that's part of your new strategic planning process. You decide what to do about those risks. Should we cease something or modify the activity that creates the risks? I mean, for example, I've given an example here, printing checks or paying cash. Checks have always been a higher risk transaction than e-payments, in my opinion. Some people have disagreed with me on some of these points at various times and in various countries I've worked in. But basically, checks are a problem. And cash is even a bigger problem. So how do we eliminate those risks? We move to e-payments, don't we? So that's one of the things. Mitigating the risks to reduce the likelihood of them occurring. So one of the things here we could do is, if we wanted to still continue to review some payments centrally, we do the high value payments or particular types of transactions which have been flagged in our system through some sort of automation process, that these represent a risk. It might be to a particular vendor. There may be certain payments that are of certain values which look a little suspicious, and we can use our systems to help us identify those. And this is what happens in Mexico, for example. In Mexico, every ministry has its own accounting system, but all the payments are still passed forward through to the Treasury, and the Treasury releases them the next day. But we're talking about millions of payments every day. So the Treasury in Mexico can't possibly review all of those payments. So they have developed some automated tools that identify higher risk payments, and they're the ones that they review. And it will be a very small sample of payments that are reviewed. In some cases, you could accept the risk. And one of the examples was during COVID, wasn't it? We were making payments to citizens and others, and sometimes there were risks. Sometimes the wrong people got the payments, but we needed to get the money out quickly. That was an imperative. So we accepted that risk. And another one is sharing or transferring the risk as well. So we get some expert advice in sometimes in the Treasury. Can we really make an assessment whether a capital project has been successfully completed? No, we can't. You need an engineer to do that. So we share the risk and we transfer some of that risk assessment to experts. So this is really important. And government has been for many years using consultants in this way. Sometimes that's been successful and sometimes that hasn't. But that's an example of a transfer mechanism as well. So risk treatments need to be cost effective, they need to be practical, and they should focus on what is the risk and what will be the negative impact if that risk was to arise. I'll just jump ahead here again, but obviously I've mentioned before that monitoring and evaluation is key. Any planning process, any risk management process, you must assess how you're performing. You must monitor performance. In fact, most modern treasuries, if you go to Turkey, for example, Turkey has key performance indicators for everything that they do in the treasury, and they are measured against their performance by government at the end of the day. So there's an assessment of how well they've performed and whether they've met their respective targets. So a modern treasury can't be reactive anymore. We need to be managing our environments. We need to be doing that on a risk management basis, making sure that the controls are commensurate with the risks. And we need to be anticipating the things that will go wrong as well. And we do that through proper monitoring and evaluation of our systems. Now, will things go wrong? Absolutely. But we have developed a system which hopefully will mitigate the really large negative outcomes as well. And this is just, again, a way of describing how all these things fit together, that we have 3 lines of defence in corporate governance, which is how we manage the organisation, making sure that we have proper controls and procedures and policies in place so that people know the jobs that they can do. And then at the end, we also have our review functions, both internal audit and external audit. So they're part of the lines of defence, but they're not involved in the management processes. They're giving us an objective of review of how our systems, etc., have gone. So I've talked about this as well, and I suppose the big message in general is that We need to be using our IT tools in the best possible way, and that does mean we should be eliminating any manual controls. We shouldn't have controls occurring outside of our system any longer. So if that does occur, then we need to design our systems so that we bring those stages into an automation phase, and that we also bring forward the controls that are made at those points, and they pass forward in the processes as well. And that will then allow us to have an approach that actually allows us to focus on the real problems, the real risks. A modern treasury shouldn't be focused on processing payments or reviewing payments every day anymore. A modern treasury should be focused on the big picture, producing financial reports, timely financial information, not just annual financial reports, by the way. We need to have regular daily reports for cash forecasting. We need weekly and monthly reports for management decision making. If it's not going to be on a full accrual basis, then it should be focusing on the important information that decision makers need. So we need to find ways to overcome those problems that have been preventing us from producing that timely information. Okay, so we need to find realistic solutions in each of our cases and our countries. And what are the opportunities? So how do we actually maximize the utility of those systems and the automation processes? And I keep on mentioning, I mentioned before about how developing countries are leading the way. You can look at Albania now as an example in Europe, really leading the way with automation and integrating systems. They're using very simple IT tools to capture data at one stage of the process and pass it forward to other systems. And it's a much more integrated framework than most countries could boast of today. And Albania would never have been an example of good practice 15 years ago. The reforms they've done there, I use them all the time now as an example of how you can integrate your data requirements and how you actually expand the coverage of the PFM framework so that it becomes more strategic and more focused on risk. So these are examples of risks. So I'll leave you to review this yourself later. I suppose one thing I want to mention here, or a couple of things I want to mention here, is one thing we need to be aware of is that IT is a powerful tool, and it's an important tool for all of us and for our future evolution and development. But there are also risks with it. One of the big risks is that we ourselves need to understand how to manage those systems, and we can't rely on IT to always represent our interests. So what I'm trying to say is that any party in any organisation will be playing the game to suit their needs, and sometimes that will be how things are. So someone needs to be watching over what everyone's doing, and there needs to be ways to verify. For example, if you've got controls that are only being managed by IT and they're not reviewable by some other party, then that's a potential risk, isn't it? And it's the same in everything we do. If any individual has too much authority and that's not reviewable, that's a major risk. And that might result in an abuse of that situation or that position. So we need checks and balances, and we need to have review to ensure the integrity of those systems. Then when people get caught and they get punished, then people will stop doing those bad things, won't they? Because if they know there's going to be negative consequences, they won't do it. Have we actually got everything working the way we need to manage the organisation, the people, the policies? For example, I go to a lot of countries and I ask to see their instructions, and they can't find them. They can't show me an electronic version of their policies, procedures. And I know it's probably not countries in this room, but I was recently in a country and I was sharing with them. I visited them in 2016 to review their accounting framework. And I basically gave up because I said, I can't see anything in writing that instructs people on how to do their job. Now, you're telling me that you can't produce proper financial statements, and this country was doing accrual, by the way. And I said, it's little wonder people don't know what their job is because they don't have any instructions or guidelines to manage that. Now, it's not to say they weren't there, but no one could put their hands on it, and they certainly weren't available electronically. So if I was a new person, how would I have ever known what was my responsibility as an accountant, other than someone tells me? And then you get the old thing about you whisper the same thing to 5 people. By the time you get to the end of the chain, the message that's received at the end of the chain is quite different to the one that was sent at the beginning of the chain, okay? All right, so I've got some examples there. You can look through those. These are just examples of risk management that's applied in different countries, and there's many good examples there. These are very practical examples. If you want more information on any of those, I'm happy to discuss those with you as well. But these are just examples. I'm sure you have your own in your country as well. And I think at that point I need to finish because I think I've gone over time. So thanks everyone, and I think we can take questions in the session later on.